Hello everybody, it's Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. Today's video I'm going to talk about probably the most commonly asked question I get from subscribers and readers and investors that I talk to, and that is, when do I sell? And it's really, to me, the toughest question of all. In fact, a lot of times these people will lament that everybody tells them when to buy, their brokers or advisors or whoever, but nobody ever pays attention and wants to tell them when to sell. And frankly, selling is probably the most difficult decisions, and it brings up all kinds of complexities that don't even exist when you're looking at the buy decision. The buy decision to me is pretty straightforward. You try to buy a great company, a good track record, something that meets your objectives, that pays it. If you're a dividend investor, something that gives you the correct dividend yield and the dividend growth potential that is also important to an income-oriented investor. If you're a growth investor, you want to see a growth potential that will compensate you for the risk you take for investing in growth stocks, and so on and so on. But, so it's easy to buy. The key is buy a good company at a good valuation, and you may not buy it at a perfect bottom, but you can usually, know that you've made a good, solid, long-term decision. It's easier to kind of rest comfortably with that. When to sell, though, it gets especially difficult. Now, as I said in the written portion here, there's lots of cliches, let your winners run. Don't, pick the flowers and water the weeds. You want to be careful, because I like to always say a portfolio is like a bar of soap. The more you handle it, the smaller it gets. And I really think there's reality to that, because every time you're forced to make a decision in this business or this game called investing, you also expose yourself to a potential mistake, especially over the short run. Nobody can predict the top or bottom. Nobody can tell you what the precise top of a stock value is going to be, nor can anyone tell you what the exact bottom is going to be. But we can make intelligent, sound, and prudent decisions. But perhaps more importantly, in the selling process, we can also apply what I call disciplined strategies that can help ease the pain of selling, and maybe even help us avoid the dreadful seller's remorse where we sell the stock and it continues to go up. There are ways to handle that and make that whole thing more palatable. I'll get into a couple of those in the video. But, I just had a subscriber, and I hope I pronounce his name right, Francisco Mikado, yesterday, in a video that I produced yesterday, posed the question, when do I sell? Well, kind of as irony would have it, I actually sold a stock that I've held for a long term just as early as yesterday. So I'm going to go through that and use it as an example of how I would implement a sell strategy, why and when. But I do want to point out my core philosophy is buy and hold, be a long-term investor, invest in the business, not the stock, with the intention of holding it for a very, very long time. So let's go ahead and look at an example that I just did yesterday. Now, this is a stock, Microchip Technology, semiconductor company, very interesting company. I bought this stock in September of 2010 at just a little over $31 a share. This isn't the exact date, but it's within a couple of days and a couple of cents a share of my cost basis in the stock. And I do want to point out, that I've held this stock for all these years. And notice how the stock price stayed within my valuation corridor, if you will. It occasionally got up to the 19 times earnings level, and I held it, and it, very often got down close to my 15 preferred PE ratio level. And then I do want you to notice, along came COVID. The company did had some pretty good operating history here. Has a good dividend record. It's not a fast dividend grower, but they have, grown their dividend. They did reduce the dividend a little bit in 2016. COVID came along and the stock took a slump, and then it caught fire just like a lot of tech stocks have today, fortunately for me. And as you can see, the price for the first time since I've held it really got separated from its valuation. Well, I sold half my position yesterday, and the reason I bring this up is because this has been a five-bagger, as Peter Lynch would say, for me so far. And I've held it again for, roughly 10 years. And the key is I took over 2 times my original investment out of the stock by selling half the position, and I'm still letting the position run because, the problem with selling a stock is you never know when the top or bottom is, as I said. So if I go in here and like into Google Finance and get a quote, the stock's up above. I sold it at around 160, by the way. It's already up over $2 from what I sold it at. But I don't have buyer's remorse because, first of all, I've made a great deal of money. And when I look at this from a forecasting perspective, and I'm using the consensus estimates of 22 analysts following the stock, what I see is potential trouble ahead, if you will. Number one is we're expecting a really good year, 15% growth for this fiscal year, which, by the way, ends in March. So I've sold this stock, you might say prematurely. You might have said, thought I'd been better off to wait, but I'll show you why I didn't. And then, we're looking for 14% next year, followed by 10. And then there's one analyst from our data provider, FactSet, that thinks we're going to have a negative year. But regardless, the company's expected to grow at about 6 to 8% a year. The long-term forecast growth rate is, by the FactSet, is about 4%. But if I go to other sites, I found sites that give me estimates for long-term growth at double-digit rates. But the point is, all of those numbers, none of those numbers, in my view, justify today's excessively high valuation. And I like to call this false profits. I would have been very happy with this stock today, just to be real clear about this. If I'd have bought it here, and when it was trading here, I was very, very happy. And here I made almost 3 times my money on the stock. That's why I call this false profits. This would have been rational to me. I'd have even been happy if it was trading up here, closer to the blue line. But now that it's separated itself so much, I now find the stock getting into that what I like to call dangerous overvaluation territory. And what it really means is this is certainly not a time to buy the stock, certainly not a stock that I would expect great returns over the next decade. I've owned it for a decade. It's one that has gotten very pricey now. But, I do like to let my winners run. I really do. I've held this stock. It's been, it's had higher valuations several times over the years, but I just kept holding the stock and it kept advancing. But here's the key. One of the things I do then when I do this, I search for other opportunities. For example, I have found other tech stocks like the old Hewlett-Packard, the old original Hewlett-Packard, which is, really a different company today. But if I look at Hewlett-Packard, I've got a stock here I can buy at a PE of 11. It's got almost a 2.5%, over a 2.5% dividend yield, with a better dividend record, by the way, of dividend growth than I saw with Microchip. I've got a much lower valuation, and I actually have very excellent earnings growth expected over the next 2 or 3 years, and I can actually make significant rates of return over the next 2 or 3 years by simply taking my proceeds of what I sold from Microchip and investing it in Hewlett-Packard. The key point here is not whether Hewlett-Packard is a good investment or not. I haven't actually made that decision yet, but it's one that I'm currently working on. The key is that I do have a suitable replacement. Another option, a stock that I'm also looking at that I might use to replace this, would be another company in the tech sector that is actually local. It's a St. Petersburg-based company, Jabil Circuit. This is another one that if I look at it from a standpoint of its recent growth and its prospects for growth going forward, it's been a double-digit grower. If I look at my forecasting graphs, this is a stock that's expected to grow at almost 14% a year. It's got about the same dividend I had with Microchip, if you recall. I got about 0.9%, but that was primarily because it was overvalued. I have a very similar dividend record with this company. This isn't really a great dividend paying stock. You can see here the dividend payout ratio is only in the 10 to 11% range. But I can get almost the same yield, but I get much more better growth potential here if I move the money into a stock like Jabil Inc. So the reality of it is this: Microchip has been a great holding for me. And, I bought it when the price made sense. I think that's the real key. I bought the stock when my valuation was sound and attractive. I've held it now for many years, for all these years here as the business continued to grow. I've done extremely well, but I've now done better than the business did. And I think that's the key, because I want to go back and make sure I cover this for you. If I bought it here, and let's say when it did trade right here at its fair value PE, where I would have made 2.7, almost 2.8 times my money, this is what I call entitled profits. In other words, I feel entitled to that because I've participated essentially in the growth, the 12% growth of the business. The total rate of return, including dividends, would have been about 13%. That's why I refer to this excess up here as false profits. In other words, I don't believe I'm really entitled to these profits because this is beyond what the business would actually have generated on my behalf. So I had a 12% grower that, has now turned into a 18% annualized rate of return. Again, instead of being a 3-bagger, it's a 5-bagger. And so if I was, going to take some money off the table, it would be now. And I do believe tech stocks have all entered into precarious territory. I've written recently about names like Apple, etc. But by the way, I don't have to stick to the tech sector. I've also got several names that are in the non-tech sector that are attractively valued now. So I do like to sell when I see excessive overvaluation. I don't care if I've hit the top here, because I can reposition that money into something that gives me better opportunity at lower risk, like Hewlett-Packard or HP, I guess it's called now, or Jabil. I can look at names like that and expect to do very, very well. And someday, if I get Microchip, if it comes back to reality, and I should say when it comes back to reality, because the market is always seeking intrinsic value or efficiency. It may not always be there like some people try to say, but it's always seeking it. So my job is to identify it. And here's the key. At this point, I really believe common sense would say you would, if you kept, for the stock, the portion of the microchip that I've kept, I'm now speculating with that money, but it's house money. I've taken all my money out with a nice profit, and now I'm playing with house money, and I'm aware of it, and I think that's the key. Speculation is not necessarily bad. This stock obviously has momentum. You can see that it's had a tremendous run up here, just since the end of, in the last year, since COVID kind of hit. The stock has actually doubled just in that short time frame after falling rather precipitously prior to it. So what I'm doing is I'm taking advantage of this false profit, if you will, and going ahead and looking for other opportunities, but I'm letting some of my money run. Now again, some people like that strategy, some don't. It's really up to you how you would deal with that. But anyway, hope you enjoyed this. I'd like to sell. If the fundamentals deteriorate, I'll sell. If I get dangerous overvaluation, I'll sell. But I often look for something to replace what I'm selling before I even sell it. I'm much more comfortable putting a stock on a watch list than I am I don't react, is what I'm trying to say. I don't just automatically sell. I try to use, I try to engage in what I call intelligent patience when I'm doing this stuff. Put it on a sell watch list, pay real closer attention to the stock, and be prepared to sell. I'm prepared to sell out of all the microchip if and when necessary, and I believe that time is probably closer than it is further away. I hope you enjoyed this video. If you did, please like it, ring the bell, share it with others if you find that others might find this useful. I'd really appreciate that, and I look forward to talking to you again real soon. This has been Chuck Carnevale saying thanks for watching.